The Federal Reserve announced its third interest rate cut of the year this week. But despite the good news for consumers, mortgage rates are still on the rise. The national average for 30-year mortgages was 6.91% this week, according to financial service company Bankrate. Ted Rossman joins us now. He is a senior industry analyst at Bankrate. Thank you so much for being here. What do you make of the uptick in mortgage rates this week?
It's been a head fake ever since the Fed started cutting rates in September because mortgage rates have gone in the opposite direction. Last fall, the average 30-year fixed mortgage rate briefly hit 8% for the first time in 20 years. That was fall of 23. And then this fall, it actually fell all the way to 6.2% in September. And everybody thought, great, more rate cuts are ahead. It's gone the other direction. A lot of it has to do with the election and the fear that many of President-elect Trump's policies could be inflationary and lead to higher interest rates. So I'm talking about tariffs, less immigration, deficit finance, tax cuts, things like that. The other thing is that economic data has come in better than expected. That's another thing that's pushed rates a bit higher.
So if someone is waiting to pull the trigger on buying a home, are they ever going to see mortgage rates in the 3, 4, or 5% again? Are we looking at 6 or higher for the foreseeable future?
The new normal is likely to be higher than it was for most of the past 20 years. We really got used to abnormally low rates ever since the financial crisis and then through the pandemic. I mean, not too long ago, like early 2000s, mortgage rates were generally in the 5 to 7% range. They spent a lot of time in the sixes during the first decade of this century. But then, since then, a lot of people got rates in the 3s and 4s. There was this once in a generation kind of refinancing boom during the pandemic. 3/4 of current homeowners have rates below 5%, half have rates below 4%. So there's this kind of golden handcuffs thing where a lot of people don't want to move and trade that low rate for a higher rate. And it's keeping inventory low and prices high. Some people say, though, date the rate and marry the house, as in if you buy now, maybe you could refinance in a year or two.
So what are your predictions for 2025? I mean, there were some articles that I was reading that said the inventory, the supply could go back up. That could be good for buyers. But the way that you're talking about it with the golden handcuffs, maybe that's not your prediction?
It doesn't seem like rates are going to change a whole lot in 2025. The Federal Reserve gave us an update yesterday. Their median projection is for a 0.5 point of cuts next year. Now, they don't directly set mortgage rates. Mortgage rates tend to track longer term rates, which are more investor dependent. Those may not actually fall as much. It's a reasonable guess to say that the average 30-year fixed mortgage rate could still be over 6% a year from now. It's 6.9 right now. So we might get a little bit of relief, but maybe somewhere in the 6 to 6.5% range is kind of the best guess. Now, people move for various reasons. Sometimes they move for job opportunities and family reasons. And that doesn't mean everybody's going to be on the sidelines forever. I think we are going to gradually see inventory pick up a little bit, but it's been slow going.
All right, Ted Rossman, thanks for joining.
No problem. Thank you.